Welcome to Paladin Financial Talk. I'm your co-host, Tony Shore, but I'm here with our host, the man with the plan. Once again, Matt Bryant is
Tony,
here.
Thank you. Great to be here.
Matt, great to have you. Well, it's your show. Thank you for having me on your show, Paladin Financial Talk. I love it when you're on the show. We always have a good time talking. We've got kind of a serious topic today.
We do.
And this is going to be a problem for most Americans are going to experience this in one way or another, either for themselves, their spouse, or a family member.
Yep.
And that's what?
Long-term care. So how do you fund healthcare expenses in retirement, especially if, the worst happens and you have to go into some sort of assisted living, nursing home type of situation? How are you actually going to cover those costs?
Right. And Nikki on last week's show talked about healthcare expenses in retirement, but really long-term care is a separate category. And she mentioned you'd be on the show hosting it today to talk about long-term care. And I'm glad you are. Now, before we get into that, though, and get into the heavy stuff, I have to ask if Matt and I look a little sleepy today. It was the annual compliance meeting.
That's right. Hey, we did spend a couple hours doing compliance. Good news is I'm compliant.
You are very compliant.
Straight and narrow.
Yeah, you guys are certified. You went through the annual compliance meeting, which is required. And what I tell everybody going into that meeting, caffeine, energy drinks, or a pillow.
That's right.
No, they don't let you sleep during them. It's mandatory.
I stayed awake. I paid attention.
No, that's good.
I wasn't on my phone the whole time.
That's
good.
We're
good.
That's good.
It was a good event.
That's good. So I know you've been busy with that, and I know right after the show you're going to get ready for a meeting with someone. I know you like it when our listeners and viewers set up consultations if they have questions. I know you're more than happy to meet with them, right?
Absolutely. And you can get in touch with us in a number of ways. Our website, paladinfinancial.com. You can request consultation there. You can go the old-fashioned route and pick up the phone.
Sure.
651-842-8406. And we're happy to have that chat with you. Regardless of what podcast you listen to, these concepts, we try to keep it high level, but there's so much nuance to it in each specific situation. So everybody's looks different. So that's why we have those in-depth conversations, and someone's interest out there will be piqued by what we talk about today, and we're happy to go deeper on it.
Yeah. Well, I think that's great. And I've been good. I had my 40th high school reunion last week. That's how old I am. Yeah. Sorry.
Hey,
I don't feel that old. I looked at all the other people there, and most of them I hadn't seen since high school. Some of them I had, but a lot of them I hadn't seen in 40 years. And I looked at some of them like, these people are old. These are old.
You didn't look in the mirror first?
You know what? I try to avoid that.
That's good.
As I get older. I don't age.
You
know that. Come on.
My 20th was this summer.
Okay.
So.
I hate you, but
that's right.
For being so young. Anyway, no, I'm kidding. I love you, Matt. So you had your 20th. That's a landmark. Did you win?
No. It happened. I just,
Yeah, I didn't go to my 20th either. We had a 25th. And then they did a 30th that I didn't go to. And now we've had our 40th, which I did. So I've only been to 2. This one was well attended. About 65 people were there out of a class of 190. So
see, we had 53 in our class, and
that's it.
Yep. And it's 550 miles away. So,
yeah, I wouldn't go to that either.
So no, I didn't make it. I'm sure it was a great time, but
we actually had people from who came, LA, who were living out in LA. They have their own little independent production company. They're trying to break into film.
Coming back to show off.
I guess. No, they're really nice, humble people. They're good people. I lived out in California for about 5.5 years, so it was fun talking to them.
And high school reunions, and there's other landmarks, but those are milestones where you start thinking, all right, what have I done so far? And what track am I on now? Maybe not necessarily financially, but that's the view we take on it is you're hitting these milestones. Are you actually prepared for it? And, a lot of times you aren't. So what can you do to get started? And Jeff teed off this series talking about the 4 pillars that we go through with people.
Yes.
So your financial life, taxes, estate, and health. It's like all those factors come into play when building an overarching financial plan. We're talking about health this month. And so healthcare expenses, how do you fund it? Making sure it doesn't completely wipe you out in retirement. There's a number of different ways to do it. And depending on your specific situation, it's, we'll look at the various options available to you.
Well, especially we're talking specifically today. I mean, there's one thing, healthcare and retirement's one thing.
Yep.
And there's still expenses, even though you might have Medicare or a Medicare Advantage, you still have out-of-pocket expenses. Sure. And that can be high, but it's nothing compared to what long-term care can do.
Right.
And now it's almost, I think, if you're 65 or for those 65 or older who hit age 65 or older, almost 2 out of 3, 70% of them will need long-term care at some point.
Yep.
And Medicare doesn't cover long-term care. They cover long-term care that's recommended after you have to be in the hospital for at least 3 days, and it has to be recommended, and it's rehabilitative care, and it's only for up to 90 days, but it can be as few as 18 if they think you've plateaued. Once you plateau, Medicare stops covering it, you're on your own, and then it's called long-term care.
Yep.
And Medicaid or Medicare doesn't cover that, right?
Right. And you know a lot about this, and I know you've talked about on our show the reason why you know a lot about this.
Yeah.
That's not an uncommon situation anymore, which is unfortunate.
Yeah, it's so expensive. Both my mom and dad. My dad's now in assisted living, but his memory and cognitive is starting to go, and he also has Parkinson's. My mom's had Parkinson's for years and years. She's late stages and can no longer really write or walk herself. Her mind is okay, but it's starting to slip. And her cost now is at $11,000 a month. Okay. And there's big jumps from assisted living apartment where my dad's at, nothing comparatively. I mean, it's where he's at is good price. It's actually the same company facility, but it's $3,500 a month for an apartment. But then it jumps up to if you're where he's an assisted living, independent living can be the same or a little less. Then there's assisted as he adds on tasks that they need to perform for him, it goes up, and eventually they'll move him over into the full-time care. And then that starts at about $6,000 or $7,000 a month and goes up from there. But once you need memory care or complete care, doing everything, going to the bathroom, getting dressed, getting in and out of bed, eating, if you need the full Monty, like my mom, she's at $11,000, and that's not a super fancy private facility, is one of the highest ranked in the state. That's why she's there. But and I'm happy about that. And their prices comparatively are reasonable. But like where my mother-in-law's at, the memory care is $12,000 a month. And you can imagine, right? If you even if you have a lot of money saved up, $12,000 a month, fast. If you're going to live a few years, and the problem is people are living longer. So, you get 5 years of memory care
that's
at $120,000.
Yeah. That wipes you out pretty quick.
Yeah, that can really wipe you out. And then what about your spouse? And if you have a family run business, the state can come back and people think, well, Medicaid will cover it. Not if you own a farm or a business, they'll take that first. You have to spend down and sell
almost everything
to qualify for Medicaid to cover it, right?
Yeah. And it's not a great situation, especially when you think it's normal, average, hardworking people that you've done the right thing, you think, your whole life, setting aside money, making sacrifices, saving so that you get into your golden years and you have these funds to enjoy retirement. Well, something happens, or eventually you live long enough and you need some sort of care, that can disappear real fast.
Yeah. But there are strategies and options that I know you've helped your clients with. So we know it's an issue and it can be a problem. What are some of the strategies?
Yep.
Then?
So a lot of people are probably familiar with just traditional long-term care insurance. It's not something we see a lot of anymore, and it's not something we really work with, but you have for a number of years paid into insurance specifically in case you get to the situation where you need long-term care. Now, some of the issues with that are, you're paying these premiums, and the premiums can be increased without any control by you.
Yeah.
And it may be something that you never wind up using. So you may be paying tens of thousands of dollars tens of thousands of dollars into these plans, and then it's something that you just never wind up using. So that's not something we see too much of anymore.
It's a use it or lose it situation, right. And the premiums are typically high, I know.
Very high, and they can be increased on you, and you have no control. And if you say that's too much, then, well, sorry, you're out of luck.
Or it doesn't cover it all. My mom had long-term care insurance, okay? But the type of insurance she had, it covers $1,000 a month, which really helped at the beginning. But now when it's $11,000 a month, that's
the drop in the bucket. Yeah, unfortunately,
that's nothing.
On the other end is self-funding. So you've built your nest egg, you've been saving, have your retirement assets. One option is, all right, I'm going to pay for this out of pocket. Maybe you have parents that were healthy their whole lives and you don't expect to need it, or it's not something you want to think about, unfortunately. You say, I can just afford this on my own, or I'll figure it out when I get there. We see that a lot as well.
That's not necessarily a good idea, though.
No, that part's not. And then in the middle, we have life insurance and annuities that they're hybrid type policies that have additional components like long-term care. So with the traditional long-term care, that money is earmarked for that one specific thing. And like you said, it's use it or lose it. So it's there for long-term care. If you never need it, well, you're out of luck. We'll start with life insurance. So whether it's indexed universal life or variable universal life, you can put money into a life insurance policy. And the primary reason people have life insurance is for the death benefit, right? So your money is going towards, first and foremost, a death benefit. But the way these things are designed is you can also have cash value that's building up over time that you can use for whatever reason, and then have hybrid components to it like long-term care benefits. So it's a way for you to take your dollars, put them towards something that has more than one benefit. So it's not necessarily use it or lose it. With life insurance, you're going to use it at some point, right?
The death benefit.
So at the very least, that's coming out of it. But there are ways to structure it so that you have access to cash when you come into a point of your life in your late 70s or maybe your 80s where health has deteriorated and you need that extra help as far as health goes, that you can turn these things into an income stream as far as that goes.
Yeah. And to clarify what you're saying there, it sounds like you're saying, I know that some of these policies can be structured so that you have a life insurance policy with the death benefit, with a nice big death benefit in case you pass. But if you should need long-term care, and to cover these big long-term care expenses, you can spend down that death benefit and use it for long-term care.
Right. So, and each life insurance carrier has their own strengths and weaknesses. So we sit down with somebody and we get to know, your situation and what you're looking for. And someone that wants to maximize their death benefit, well, there's one route there, and long-term care isn't a concern. So that's not something they want their money going towards. But for folks that maybe want kind of the best of both worlds, or long-term care is a concern, perhaps the death benefit, your money doesn't go as much towards death benefit, but you have this larger benefit as far as long-term care goes. So if that did happen, you have this chunk to pull from. And if, it doesn't happen, you don't need it, you still have this death benefit over here for your heirs.
Sure. That sounds great. And then there's the cash value life insurance policies, which there's a lot of benefits to that. You can grow your money inside this policy and build up a cash value and use some of that for long-term care if you need it.
Yeah. Right? And if you do it right, you can pull that money out tax-free. So
wow, that's great.
You're as you alluded to, you're sacrificing your death benefit, but that may not be the primary concern, right? So someone's got to pay for this long-term care. And for some folks, maybe it's relying upon their adult children to cover it.
Yeah.
The cash value life insurance, maybe on the one hand, that death benefit is earmarked for those kids, but it can also be used while you're still alive, pull out that cash value and use that to help fund. It doesn't have to be long-term care, but for today's purposes, that's what we would use it for. And so if you structure it properly in advance, then all of a sudden your money is working for you in a couple of different ways.
Yeah. And I want to point out to our listeners, I know from working with Paladin and doing the show with the Paladin team for so long, that you do wealth management and you really look at what's in the best interest of your clients. And when you sit down with them, like my wife and I, you're not big on pushing. You're not trying to sell things or get a commission. You're just like, okay, what are your goals? What are your needs? What do you want to accomplish? Okay, you want to do that? Well, the best possible option out there is cash value life insurance to get some tax-free money in retirement and have that available. Or maybe it's self-funding and we do a little more moving around with the markets or investments, right?
Yeah, we're fairly agnostic when it comes to like specific product. Our goal is to get to know you and like, what is your situation?
Yeah.
What does
You're not trying to sell insurance. You're just trying to meet needs for your clients, no matter what they are.
And insurance can be a valuable component for some people.
Right.
We have clients that don't have any as far as that goes. And they are more managed portfolios. Let's build wealth. And that's the route they want to take. Everything you do has a pro and a con to it. Like there's no
investments, the markets, real estate, whatever it is, precious metals, annuities, insurance, life insurance. There are pros and cons, but you don't want to get into the wrong life insurance or a bad situation with anything, any investments or annuities or life insurance. And a lot of people are sold products they don't need or aren't right for their needs. And that is why you need to work with a trusted financial professional, a fiduciary like yourselves. And I just think that's so important. Now, when you mentioned, there's one thing we haven't mentioned. You mentioned it briefly. And to some people, it's the A word. It's a bad word, but annuities are might be a good option for life or long-term care, right?
Yeah, it can be a valuable component where, again, your dollars are working for you potentially in a couple of different ways. The idea behind, and there's all kinds of different annuities. We'll focus on fixed index annuities just for today's concept, but
they usually have the best deals and structures for people, value, right?
And the annuity will protect you against stock market risk. So that's one valuable component.
So your principal is protected.
Right. So when we sit down with you, we're looking at your risk profile, and part of our obligation is making sure everything that we pull together for you ultimately blends together to hit your risk profile, whether you're conservative or moderate or aggressive. Like, we're trying to blend all these different tools available to us to hit that profile. So the annuity can help manage stock market risk. It can also be turned into a dedicated income stream at some point where, a lot of people don't have pensions nowadays. Private corporations a lot of times don't offer them.
Yeah, usually not.
If you work for the government, you'll still likely get one, but this is a way for you to take a chunk of your nest egg and turn it into an income stream that lasts as long as you live, potentially as long as you and your spouse or a spouse live. So it's a valuable tool for structuring income for a person. But they also have hybrid components, some of them, where you can say, if I can't do two of my activities of daily living, which is going into the long-term care, then my income from that policy might double, for example, for a period of time. So you already alluded to how much those facilities can cost. Well, when you go into one, you're not necessarily coming out, and you'll spend a few years there. Perhaps. Typically not.
Yeah.
So the policies are designed so that when you enter those facilities and your expenses skyrocket, they can contribute more towards those expenses. So there's nuance to all of these, but that's another valuable tool where you put those dollars in, and it's not just long-term care. It's an extra benefit, but you can also use it for market protection. You can use it for income and just general retirement, and also long-term care if necessary.
But again, it's don't do any of this without working with a trusted financial professional. Don't just let some insurance salesman out there sell you. Nothing wrong with insurance or insurance salesmen, because you need insurance to protect your things, just like your home, your auto. You want to protect your health. There are reasons you want to protect your nest egg, and that's why we're talking about this. But working with an independent financial advisor who's a fiduciary, who's going to look out for your best interests and look at all the options, not eliminate. Because I've heard some investment firms, they just want 100% of your money in the market, no matter what your situation, no matter how old you are or when you're going to need it. 100% has to stay in the market. Other people are like, they just want to sell you a life insurance policy that's going to make them the biggest commission. And that's why people get so discouraged, right?
Yes. And you mentioned 2 words there. We're independent and we're fiduciary. So we're not beholden to any company. We can go through all the different insurance carriers out there. We don't have to offer insurance to our clients. And when we sit down with people, you've been through it. We go through the numeric plan with everybody, which is all the numbers that go into retirement.
Yep.
And we also have the written plan, which is called the Paladin plan. So we have all these different topics built out, and we go through them every meeting. So it's not just talking about your numbers. It's, hey, you haven't done these things that we've recommended to help prepare you, whether it's your estate, whether it's tax planning, whether it's, in this case, insurance, healthcare, long-term care. We hound you on it. Yeah. And
you did estate planning. Sarah and I finally had to, Sarah's like, we're not going to another annual meeting with Jeff Foley and Matt without having this done. So we finally got it done. And because we didn't want to face the wrath of Paladin.
That's right. And
we were afraid.
Yeah. And hey, it's in your best
interest. Once Nikki Foley came on board,
then we're like, a done deal.
We're doing whatever they say because we don't want to. We don't want her to get after us.
And you mentioned a lot of people that just push insurance because that's what they can offer. It's all these individual components. If you look at them in a vacuum, you can say, "Oh, this is a no-brainer. This absolutely makes sense." Well,
sure.
You need to pull together everything. You need to look at what your Social Security is, if you have a pension, what your nest egg looks like, longevity, current health, like all these different things need to be pulled together. Then you say, okay, well, in this situation, this type of policy might be best, but that's not who you are. So we need to pivot and look at something that perhaps makes more sense. And everybody's got emotion tied to it. Everybody's got different views on legacy and leaving money behind and being a burden to your kids. So
that's why I love you guys, because you're going to tell us what we need to hear, not what we want to hear. You help take the emotion out of these decisions, right?
Yes, we're emotionless. As far as no. So it's tough. You're facing mortality. You're facing, and I think you mentioned it on the last show, 11,000 people are turning 65
every day. 11,200 people are turning 65, age 65 every single day in America. That's just Americans.
And think about that, where a 65-year-old may have a 90 or 95-year-old parent, or perhaps their parents have deceased, but they went through this already. You're 65. You're also looking at like, I'm 65. Like, I'm doing well. I'm healthy now, but I know it's not that far off that 75, 85, where I may be in that position where I don't want my kids to have to go through what I went through, because you're going through it right now. And it's
with my wife's mom, and then my parents, my mom and dad. So, and all great people and doing, all things considered, doing great. It's just, it's a lot. It's a lot. Yeah.
And you're raising your own family.
And I have my own 3 kids. We have my wife and I have our own family. So, we're part of the sandwich generation, and you just have to deal with it. But I'll tell you what makes it a lot better is working with a financial services professional. You avoid costly mistakes. You at least know what you should be doing.
Yeah.
You're not forcing people to do anything, but you're telling them what, probably needs to happen. And so that's really good.
And we've seen it all before, which we can talk about. Hey, you don't expect this to happen to you, but here's some of the pitfalls if it does happen to you. And here's some of the things you can do to mitigate that. We talked about you can't eliminate risk, but you can certainly spread that risk out or mitigate it in certain areas. And that's what we're here trying to do.
Yeah. And I know, back on the investment side, you guys have done a really great job with asset allocation and growth, and some great portfolios that you offer. So there is still that side. We're not just talking about insurance, but I really think it's important to look at the big picture.
It is.
And I know that's what you did today. Thanks for all the great information.
Good. Yeah.
These are great options. It's good to know that there are hybrid policies and options out there now to help people cover this long-term care costs.
There are. It's a lot to navigate. That's what we do.
Yeah.
And like I said already, some situations work for others and not so much for other people. So we're here to help navigate that and figure out what's best for you. There are a lot of questions. I'm sure people listening are thinking, where do I start? Call us, 651-842-8406. Go to our website. There's great resources there. You can ask us to reach out via the website. So if you have questions at all, don't hesitate. That's what we do.
All right. What's the web address?
PaladinFinancial.com.
Yep, PaladinFinancial.com. And give that phone number one more time.
651-842-8406.
All right. Well, thank you, Matt. Great show today. Tough topic. Long-term care. Nobody likes to think about it, but it's a reality for so many people. And whether it's to help your parents deal with it or yourself, make sure you have a plan in place.
Yes.
But that does it for today's episode of Paladin Financial Talk with our host today, Matt Bryant.